Bitcoin's drop from 126,000 down to 80,000 didn't just trigger panic, it unleashed a wave of new narratives about what's really going on behind the scenes. But what if there was another force in the background? A quiet index memo from MSCI that suddenly became ammunition for a Jpmogon hit piece? Could we be watching the opening shots of a quiet war? The White House on one side, America's largest bank on the other, with Bitcoin and Michael Saylor's strategy caught directly in the crossfire. Today, we're going to lay out the full timeline, separate signal from noise, and ask the only question that really matters. If Bitcoin is this threatening to the system, what does that tell you about where this is all headed? Welcome to No Second Best, the show where conviction meets reality, and reality points straight to Bitcoin. I'm your host, Hurley. Now let's get into it. Over the last month, Bitcoin has been through one of the sharpest sentiment reversals we've seen since 2022. We ran from an all-time high of $126,000 to $80,000 within a month, and once again, fear took over. But what made this sell-off different wasn't just the volatility, it was the narrative vacuum. Nobody could point to a single clean catalyst. And when there's no clear cause, people start searching for one. That's when Bitcoin Twitter found a villain, or at least the outline of one. An article on X from someone named Marilyn Hoddle went massively viral. The claim was simple, dramatic, and honestly pretty compelling. The article outlined a quiet battle happening between a pro-Bitcoin White House and the most powerful bank in America, Jpmogon. And the first battleground isn't Bitcoin itself, it's Michael Saylor's strategy. And why MSTR? Because they're the largest corporate Bitcoin holder on Earth. It's the company that proved you can use Wall Street tools against Wall Street, and it's inspiring dozens of other companies to follow the same playbook. Now here's where it gets interesting. Over the summer, Jpmogon quietly hiked margin requirements on MSTR-backed loans from 50% to 95%. That forced a lot of clients to unwind positions or sell shares. Some even reported delayed share transfers, taking days or weeks to move stock out of JPM's custody. Then, months later, another shoe drops. A memo from MSCI, one of the world's biggest index providers, suggesting the removal of companies whose balance sheets are majority Bitcoin. And right when Bitcoin sentiment was hitting rock bottom, Jpmogon suddenly starts highlighting that memo to clients, warning about delisting risk. Maybe it's coincidence, maybe it's timing, or maybe this was a coordinated attempt to scare investors out of Bitcoin treasury companies. Either way, the narrative ignited. Now, most people don't know what MSCI even does. I know I didn't. So let's break it down simply. MSCI builds the indexes that trillions of dollars track. If MSCI removes a company from one of its major indexes, every fund that tracks that index is forced to sell. This is why the memo mattered. It directly affects Strategy, Metaplanet, and virtually all Bitcoin treasury companies. And here's where the fear comes in. If MSCI makes that rule official, passive funds will be forced to dump those stocks, which would create temporary downward pressure. That's why Jpmogon amplifying this memo weeks after it was published set off alarm bells. Was it malice, ignorance, or just opportunistic timing during a sell-off? I'll let you draw your own conclusions, but it seems to have acted as gasoline on an already panicked market. Once the narrative caught fire, Bitcoin Twitter went to war. Hashtag boycott Jpmogon started trending. Then Grant Cardone posted that he pulled $20 million out of Chase and is suing them. Strike CEO Jack Mallers even brought forward that he and his father's company were also debanked by Jpmogon, with no explanation of why.
In Bitcoin specifically, you had the Jpmogon CEO and chairman Jamie Dimon calling it essentially pet rock, and once again calling into question its worth and its value here. I would love to get your reaction, especially as some of the financial industry elites and figureheads are continuing to cast some doubt here.
Yeah, thanks for having me, Brad. What do I think about Jeffrey Epstein's banker being concerned that a distributed, decentralized, open public money could potentially be used for bad things, sitting on a ski resort in Davos? I don't really care. I don't know why anyone cares, right? I mean, that guy knows when money's used for bad things. So it's a weird opinion of his. And my pet rock was up, as you said, 160% last year. It performed well against the dollar. So I don't know. I don't really care what that guy has to say about Bitcoin. I don't know why anybody does.
And then we got this clip from Eric Trump on CNBC talking about being debanked and saying out loud what millions of Americans feel about the banking system.
We had to get into cryptocurrency. We didn't have any other avenues. We didn't have any banks. The largest financial institutions shut us out. And you know what's really interesting? Now they're all coming back. and they're kissing our you-know-whats. Every single day, the very same people who canceled us, oh yes, we'd love to have a relationship with you. We'd love to have a relationship with you. Our financial system is so dishonest. It is so incredibly dishonest. And I would love nothing more than to see blockchain replace so many of these institutions that have been so punitive to so many people. Let me give you one other secret. The people in our financial system who have always had the advantage are guys like us, right? Powerful companies with famous last names, with a lot of zeros on the balance sheet. They have been the worst for the average retail consumer who doesn't stand a chance against a traditional financial system. They have no leverage, they have no negotiation power, and they get feed to death. Crypto solves all of that. Blockchain solves all of that. There is nothing that can't be done on blockchain that Jpmogon Chase can do, that Bank of America, that can't be done better, faster, cheaper, and more transparently. And I think that's a wonderful thing for humanity. I think that's a wonderful thing for the people of our country. And I think that's a wonderful thing in putting real checks and balances on the very people who weaponize the financial system against people that they didn't like for political reasons.
What Eric just described is exactly why this whole story hit such a nerve. No one trusts big banks. They don't trust gatekeepers. And when a giant institution like Jpmogon starts tightening screws on Bitcoin-facing companies, it reinforces what millions of Americans already feel. The banking system is not on your side, and it's not designed to protect you. And here's where the political angle comes in. Because whether you agree with them or not, the Trump administration has taken a very public stance against the legacy banking system. Eric Trump has said many times in interviews that his family has been debanked. And insiders around the campaign are openly talking about reforming the financial system, pushing stablecoins forward, and treating Bitcoin as a strategic asset, not a threat. So when people on X frame this MSCI, Jpmogon, and Strategy episode as a quiet financial war, it's not coming out of nowhere. There really is a White House leaning toward Bitcoin, and there really are legacy banks and index providers who would prefer the world stay exactly as it is. Which brings us to what Michael Saylor said this week when he was asked directly about Jpmogon's alarmist report.
And lastly, I just want to ask you about the Jpmogon report that came out this morning warning that Strategy could be excluded from benchmarks like NASDAQ, MSCI, and it could trigger an estimated $2.8 billion in automatic outflows. That's just from the MSCI alone. What's your response to that?
I think it's a bit alarmist. I'm not so sure the numbers are nearly that high. I think actually the numbers would be much smaller. I also think it's already priced into the market by a factor of 10 if you count it. I don't think there's any relationship between the decision-making of MSCI and the NASDAQ 100 or the S&P 500 index allocators. The company is an operating company. It's just like insurance companies use capital in order to create financial products, and banks use capital to create financial products. We use capital to create digital credit finance products. It's possible there are people in the world that don't fully appreciate digital credit or digital treasuries. That wouldn't surprise me. We had that challenge with bankers that didn't want to bank Bitcoin. We had that challenge with accountants that were a little bit skeptical of digital assets accounting. The accountants embraced the asset, the bankers embraced the asset, the politicians embraced the asset. I think we'll educate all of the companies in the space. Ultimately, it's above my pay grade to decide whether MSCI embraces digital asset holders or digital credit or not. It's just like it's above my pay grade whether the S&P 500 puts us in the index. But what I would say is, over the long run, it doesn't matter, because over the long run, this will create near-term volatility. But if the world wants a bank account that pays them 10% rock dividends, and if Bitcoin is digital capital superior to gold, then it's not going to matter what an equity index allocator decides. If the insurance companies don't want to buy Bitcoin and the banks don't want to buy Bitcoin, or the index allocator doesn't want to support a digital treasury company, the free market is going to allocate capital and it will adjust. It just creates a bigger opportunity for some other equity investor that will pile into this particular asset class and support these kind of companies. So it is what it is. It'll work itself out. When you have a massive drawdown, everyone looks for a reason why. and they will grasp it. Is this the reason why? Everybody wants a reason for to explain their pain or the storm or the volatility. Is it the crypto exchange, liquidation bots, or is it this, or is it that? At the end of the day, if you look at the chart of Bitcoin for the past 15 years, there's 15 major drawdowns. It always comes back to an all-time high. There's 5 brutal pullbacks in the past 5 years. This is not the most brutal. All of those things have happened without the support of the politicians, without the support of the banking industry, without the ETFs, without the IBIT derivatives market, without the support of MSCI, without the support of the S&P index. I could go on and on and on. The reason that digital assets are spreading around the world is because there's a billion people. They want to hold the money in their hand. They want to move the money at the speed of light. They don't want to be dependent on 20th century financial structures. They don't trust gatekeepers. And they would like to move forward with their lives with some control, with financial freedom and sovereignty and property rights. And those fundamentals are stronger than ever. We just had the Secretary of the Treasury, Scott Bessent, show up at the launch of PubKey in Washington, D.C. last night, right? And so in the midst of all the, the crypto chaos, you have the most powerful financial regulator in the world implicitly showing his support for the crypto economy, for digital gold, for Bitcoin, and explicitly giving guidance to banks that it's okay to custody crypto assets, it's okay to actually handle them as part of staking and fee allocations, and it's okay to extend credit. And that is the most profound thing that's happened in 17 years in this industry. And if we keep our eyes on that, then the near-term volatility is just going to be noise. We have to work our way through it cheerfully, constructively. It'll eventually pass. People will look back and smile and say, you remember the day when that news story came out.
What Saylor lays out here is the heartbeat of this whole narrative. There are a billion people who want money they can hold themselves, money they can move at the speed of light, money that banks can't debase, freeze, margin, or weaponize. Bitcoin isn't rising in popularity because it's edgy or speculative. It's popular because the legacy system keeps proving why we need it. And just like we talked about in the gold revaluation episode, this isn't happening in a vacuum. It's part of a much larger monetary transition playing out in real time globally. And it's one where Bitcoin plays a much bigger part than the average person realizes. And here's the thing that Bitcoiners don't want to admit. Bitcoin is for enemies. Your enemies can adopt it. Your competitors can adopt it. Even your adversaries, like Jpmogon, can be forced to adopt it eventually. That's why Bitcoin wins, because even the people trying to stop it end up using it. Of course, very little in this viral theory is proven. MSCI isn't banning strategy, it's doing a consultation. Jpmogon may simply be acting on internal risk models. Some timelines might be coincidence, not coordination. We don't need a conspiracy to make the simple point. Bitcoin is a threat to the banking system, and the banking system will push back. This is the then they fight you phase, and it's messy, emotional, and full of noise. But Bitcoin doesn't care, and Bitcoiners shouldn't overreact either. It's important to stay grounded and zoom out. After the FUD and sharp 35% correction, here's what the data is saying. More than 8% of all Bitcoin has moved in the last 7 days, something we've only ever seen during major bottoms. Roughly 5.8% of supply changed hands between 83K and 86K, a huge ownership transfer. Proof convicted long-term holders are buying up this dip. The top traded IBIT options this week? All calls. Institutions are buying upside right now. This clearly wasn't the end. This was a reset. The same kind of reset Bitcoin does every single cycle. And moments like this are the reminder every Bitcoiner eventually learns. If your Bitcoin depends on margin desks, index providers, or bank policies, it's not really your Bitcoin. That's why self-custody matters. It's the final line of defense in a world that's becoming more financialized and more adversarial by the day. And it's why having a real long-term Bitcoin strategy matters even more. One that isn't built on someone else's permissions. And that's where Swan Private comes in. The Swan Private team works directly with individuals, families, and businesses to build serious Bitcoin acquisition plans, custody frameworks, and long-term wealth strategies, with real human expertise and a focus on security, clarity, and conviction. If you want a partner who understands this landscape and helps you navigate it with confidence, go to swan.com/nosecondbest and talk with a member of the Swan Private team today. So what do you think? Is Jpmogan really trying to kneecap Bitcoin treasury companies? Is MSCI part of a coordinated pushback? Or is this all just legacy institutions stumbling over an asset they still don't fully understand? Let me know your thoughts in the comments. And if this video brought some clarity, make sure to like it and share it with